be very careful on investing into cryptocurrency right now. We still gotta pay attention to the overall macroeconomics before aping completely into the cryptocurrency now. So if you can take a look at CoinMicroCap right here, the overall cryptocurrency market right now is currently having a double-digit gains. You can see Cardano right here has been growing insane. Bitcoin has been gaining steam, Ethereum as well, XRP, Dogecoin, Polygon up double digits nearly. Solana came back from $8 to $16.34. It might seem all fun and games. Crypto has reached its bottom and it's now gonna go up to the moon. No. So right now, if you guys ask me, do you think the crypto market bottom is in? I would say no. And here's the reason why. Macroeconomics. So I'm not going to waste any time. Let's get to the first reason why. Genesis, DCG, and Gemini is still not resolved yet. Genesis owner DCG faces SEC and DOJ probes. Alright? Federal prosecutors in New York along with the SEC are investigating Digital Currency Group for internal transfers as at its lending subsidiary Genesis. DCG has received requests for documents and interviews by prosecutors in the Eastern District of New York. The report states, citing people familiar with the investigation, the SEC is also separately investigating DCG. So DCG has been accused of internal trading with Genesis. Same thing that happened with FTX and Alameda Research. So for those who don't understand what happened to DCG and Genesis, I would recommend you to check my previous video. I'm gonna link it down on the description. But for those who want to get a quick rundown, basically what happened with Genesis, which is a subsidiary under DCG, it has received, it loaned out $2.36 billion worth of loans to Three Arrows Capital, which collapsed. Okay. So Genesis Global Trading filed a claim against 3AC for $1.2 billion, which was assumed by its parent company. According to CoinDesk, the move resulted in a $1.1 billion promissory note due to DCG in 2023. So Genesis still trying to get back their money. However, in November, it was revealed that DCG had also borrowed money from Genesis. DCG currently has $575 million worth of intercompany loans which are due to Genesis in May. And what does that have to do with Gemini? Genesis has been under fire from cryptocurrency exchange Gemini. The crypto lender owes $900 million to Gemini Earn, which is a high-yield lending product on Gemini, which they collaborated with Genesis to provide their services to crypto investors. So we can see from here, DCG is currently facing a lot of questions: insolvency, internal trading, fraud. So let's take a look at DCG's portfolio and we'll get a clearer picture if DCG is deemed to be insolvent because they're still not paying back their loans. This is what's going to happen. They're going to have to liquidate their portfolio in order to raise liquidity to pay back their loans, pay back Genesis, and pay back Gemini. So this is the cryptocurrencies that they have under their holdings. They have Bitcoin, Ethereum, ETC, Filecoin, Hedera, Flow, Decentraland, Zcash, Degraph, Stacks, Basic Attention Token, Reserves Right. You can see a lot of these cryptocurrencies are under their holdings and they hold massive amounts of them. So if they were to sell everything and liquidate, it will bring a lot of hurt and pain to the cryptocurrency market, and we're gonna see a downfall like never before, even more catastrophic than the FTX collapsed. Okay, so another reason why, Bitcoin mining. So Bitcoin miners got crushed by crypto winter back in 2022, and 2023 may bring more pain. Why is that? High energy prices, increasing competition for Bitcoin blocks, and bear market hits miners, knocking out those with high leverage. The sector was shaken by bankruptcies and loan defaults, and next year will likely bring even more pain as miners struggle to bolster their balance sheets and operations. And why is that? Industry participants say that lots of money was spent over the last year to boost hash rate, a measuring of computing power on the Bitcoin network, but that in many cases those investments didn't pay off, as companies loaded up on debt to finance the growth only to see the economics of crypto mining break down. There aren't many ways to financially materialize those plans. One either sells Bitcoin, borrows debts, or issues equity. When selling mined Bitcoin was barely enough to cover operating expenses, many opted for debt financing as the equity market turned cold, and lenders were too optimistic. So, for a simpler breakdown, meaning because Bitcoin mining requires a large amount of operating expenses, they will go on debt and borrow money from lenders to keep on operating and hoping that the Bitcoins that they mined will be able to cover their debt and cover their operating expenses. However, the downfall of FTX, Alameda Research, Luna, Three Arrows Capital, Celsius, a lot of all those collapse actually caused a financial downfall and Bitcoin mining to become an unprofitable industry, and they're not able to pay back their debts because Bitcoin is currently sitting at $17,000 only, and it's barely covering their operating expenses, which led to them having to borrow money, and now they're unable to pay it back. So you can see the debt to equity ratio is insane. 140% in the first quarter of 2022, 343%, 355%. They're holding more debts than equities, which means they have more debt than profits. Okay, so it is a dangerous time to be investing in Bitcoin. Okay, but I'm gonna give you a tip at the end of the video, so please stay. The third reason, SEC versus Ripple lawsuit. It is simple as that. I'm gonna make it simple and short. If the SEC wins, crypto going down. If the XRP wins, crypto is safe and will start to gain steam. Easy as that. Why? The SEC versus Ripple XRP case is now 2 years old, and the final decision would be a landmark case for both the SEC and Ripple. On the side of SEC, a judgment declaring XRP as a security could reshape digital asset regulation in the country. Some people believe that the case would have a wider reach, with authorities going after centralized exchange like Binance, Coinbase, and Kraken. Louis Cohen, an attorney specializing in Web3 and digital assets, stated that the SEC wants to go all out of its wins against XRP. Basically meaning, if XRP is deemed as security, Ethereum, Cardano, Solana, every other cryptocurrency except for Bitcoin will be under scrutiny. They will be deemed as security, and the SEC will not stop until they have control of every single cryptocurrency. Okay, so for those who don't understand what is a security, meaning it is like a contract for investment. Okay, it's like a contract for investment, and you need to register your asset under the SEC to allow people, okay, to have that investment contract. So what is a security for cryptocurrencies? It is something like staking. So you agree to put up your money to get returns. So that is an investment contract, which falls under the category of security, which falls under the guardian of the SEC. So the SEC are going after XRP because they assume that XRP are giving out investment contracts. However, the XRP counters the SEC, but the lawsuit is still ongoing with no sign of any settlements yet. But if the SEC wins, it is gonna be bad. The cryptocurrency will tank. Okay, so this is the third reason why I wouldn't go all out on the cryptocurrency market now. The fourth and final reason from my side is the high inflation rates that is going on in the United States, because the United States plays a huge part in the cryptocurrency price because it is one of the leading economical monoliths in the world. Okay, so you can see in November it is still 7.1%, and mind you guys, the target inflation rate is 2%. So in the United States it is still 7.1%. It is still high, and the December inflation rate will be released on the 12th of November. So there's still 3 more days and we'll see what's going to happen. If the inflation rate is decreasing, there might be a slight pump again, but I wouldn't just ape everything into cryptocurrency. Now, what you can do, this is my tip, is obviously DCA, dollar cost averaging. You can buy daily or you can buy weekly in small amounts, okay, so that you won't miss the bottom and you won't miss the top. So you don't have to catch a falling knife, or you don't have to buy the exact top, okay, and just, being burned and just losing money overall. So DCA is a good strategy now, okay? So yes, we can relish the greens around the cryptocurrency market, but please be careful, trade carefully. There's going to be a lot of volatility going on in the next couple of days and weeks, but please, if you guys really want to invest, I suggest DCA is the best way to go, okay? So with that being said, pay attention to the macroeconomics. Remember to like, subscribe, and comment, and let me know what you guys think. Is the cryptocurrency bottom in yet? Okay? So I'm gonna see you guys in the next video. Peace.